In today's economy, more people than ever are looking to buy and sell businesses. But how do you do it? Welcome to the Deal Board, presented by Transworld Business Advisors. Straight talk about real deals and real people. Listen to stories, interviews, and expert advice to help your business sale, merger, or acquisition process. Now, here are your business exit experts, Andy and JT.
Hey, and welcome to the Deal Board podcast. I'm JT Tatum, President, Transworld Business Advisor, with my co-host,
Andy Cagnetta,
yes,
founder of Transworld Business Advisors. And I think that's just because I've hung around too long.
But it's not like founder emeritus. How do you say that?
No, we're still working.
Yes,
we're still working and selling lots of deals. And we want to help people buy and sell.
And that's what this Deal Board podcast is all about, educating you on the process of selling and buying a business here in the U.S.
Yeah.
So today's episode, Andy, what are we going to cover?
We are going to talk about how sellers can pre-qualify their deals for the SBA. What does that mean?
And why that's so important.
Yeah, it's really important.
Yeah.
So,
all right, good. So that's episode today for the Deal Board podcast. Let's jump in.
Yeah, let's jump in. So why does pre-qualification matter?
And probably matters more than sellers think.
Yeah.
You know, I mean,
think so too.
It's kind of like when you're taking your house to market and you want to, or your commercial property, and you're like, oh, let's just put it on the market and see what happens. But you want to pre-qualify it because when the buyer does come, you want to know that you've got the bank ready, standing in the wings to be able to put that process, that whole deal together, as long as a qualified buyer shows up.
Yeah, I think it matters for a lot of reasons. It shows the buyer community that you have your stuff together enough for a bank to, have approved it, quote unquote. And we're going to talk about what that means in a second.
Right.
And second of all, for what it does is it opens up for a lot of new buyers because, and we've talked about this, and we met with Biz Buy Sell, and we met with some of the other portals and local associations about us being able to advertise the down payment available. And that makes a big difference because if people are using filters to look for businesses, that's why it's going to matter.
Okay. And I think now you're starting to see some of the portals are also offering pre-screened, pre-qualified, whatever term they want to use, badges on some of the listings.
Right.
So as a buyer scrolling through, you can see there's businesses that the bank has already taken a look at and said, yes, if you're a qualified buyer, we'll do that deal. And to your point, with a down payment of 10%, 20%, 5%, whatever the deal might be, that helps the buyer then to quickly decide, I'm going to follow through on pursuing that deal.
Yeah, I mean, I think it helps the buyers understand that this is financing ready. And to me, what it signals to the marketplace is that this deal has been looked at not just by the business broker and the seller picking a price.
Right.
That somewhere somebody else looked at this and said, yeah, this deal makes sense.
Yeah. As Glenn used to say, the deal pencils.
Right.
Yes.
Right.
It's got a pencil, right? And the things that are important on the bank side is that there's enough cash flow available in the business to be able to service the debt, pay the loan back, and that there's enough money left over for the buyer to earn the livable wage.
Yeah. And we're going to talk about what the sellers need to have ready to get pre-qualified, if they can be pre-qualified, because some businesses are still run like it's the 1980s and they don't have a good purchase, point of sale system, or they don't have good books and records. And that's a problem. So this pre-qualification really is, like you said, it's almost like a good housekeeping badge of—
It's a seal of approval.
Seal of approval, badge of honor.
Right.
I think it shows the marketplace that this is a business that pencils, that has the ability to be bought and you can leverage into it.
So does the pre-screening, Andy, in your experience, what does that say? Is that like it is approved and absolutely guaranteed that the buyer is going to be able to buy that business, or are there it's like the initial stage of it? What do you see?
No, this is a very precursory look at the business. It does not mean it could be financed even. It's just a quick look and like you said, some of these banks have got it down to they have AI looking at these things, and they have models, and they have we're giving them the financials, we're giving them our teasers and our BLIs, whatever you want to call them.
Yep.
And they're pre-qualifying it based on the representations that are being made.
Yes, yes. And they'll issue that letter, but that letter is basically saying, we've looked at it based on that information, and this is what the deal could look like. It's almost a deal structure that they're going to issue.
Yes.
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 And with this much down, this is what the monthly payment's going to be, and this is how long the term would be. But it's not a guarantee, and it's not an obligation on the part of the lender.
No, not at all. And that might not be the eventual lender. And, and obviously it depends on the buyer too, but we'll talk about that in a minute.
Good. Okay. So in this case, then, as a business seller, what are the things that need to be able, what do they need to be able to present to the bank or the lender in order for the lender to be able to go through their checklist and come back and say, here's a pre-screened letter?
Well, the banks are live and die by tax returns.
Okay.
And what's on the tax returns is what's on the tax returns. Banks don't love, and we always talk about the front page of the tax returns. Why? Because the front page has the net income.
Yep.
It has the payments to the seller as a salary. It has the depreciation and interest if it had debt beforehand. So that's the money that's really readily available to pay debt service.
Debt service, right. Yeah.
And then the back page, if they're going to do addbacks, which is some of the lifestyle things or maybe some unnecessary things. The banks don't love that. They're getting better about it, though.
Yeah.
There are some Q of E, quality of earning light reports that some of the valuation folks are doing that the banks are accepting. But at the most part, they're looking at 3 years of tax returns. Now, you might be sitting in March. You might be sitting in April. You might be sitting in a place where you've filed for an extension for last year.
Right.
So your last tax return could literally be almost
a year
2
and a half
years
old.
right. almost 2 years
old, yes.
by the end of the year.
Right.
So they will ask for current financials.
Right. So like you said, it's 3 years of tax returns, and they prefer to have the most recent. Like by the time this episode airs, we could be talking about May, June.
Right.
At that point, you probably should have had your tax returns done. If you filed for an extension, to your point,
right,
they're going to be pushing you to say, before we actually do the deal across the line, you got to get those new tax returns done, because that's what they're basing it on. And if you've had some kind of a drop off in 2025 that was not identified, that could change whether or not the bank finances the deal.
Yes, yes. And I've seen them accept draft tax returns.
Okay.
If they came from
Not filed yet.
Not filed yet, which you could still file for an extension, and you could still, and if you were being aggressive on your tax returns beforehand, it might be an opportunity for you to be less aggressive.
Okay.
And have a better, because really what matters to the SBA is the ability for the buyer to pay it back. So they're going to look at current financials.
Got it. So the 3 years of tax returns,
right,
they're going to want balance sheets outside of tax returns. They're going to want P&Ls.
Yep.
Okay. And the P&L could be different than the tax return. It
can be a little bit.
Scenario, but yes.
Well, it can be. And there's some tiebacks depending on what kind of structure it is. Could be a C corp, could be an
LLC,
LLC, could be a sole proprietorship, which is Schedule C.
Got it.
So there are different ways that they could tie it back, but again, they're looking for that SDE that is reliable. Let's put it that way. That's documentable, and so they're looking for an organized package.
Okay. And let's just camp on that SDE piece for just a second, because you're talking about two different sets of folks that may be listening to the podcast, right? It's the Main Street, Lower Main Street, Upper Main Street stuff, and then it's the middle market, upper middle market.
Right.
And where do you see that threshold between like an SDE versus an EBITDA calculation?
It comes into play, I think, when it becomes hard for an individual to buy a business. And the SBA cap is $5 million right now, $10 million on some manufacturing things, but let's say $5 million for most businesses. A business owner, if an individual buyer came in, maybe they could buy it with $1 million down, maybe even 500 down. So that's still attainable for some folks to buy an individual business. Where it starts getting harder is when it's $1 million of SDE, or $1 million of EBITDA, and companies are going to buy companies.
Okay.
And companies are not looking for SDE because they're going to have to put in their own management team to run that company.
Right.
So that's why they're looking at things like adjusted EBITDA.
Okay, got it. So in that case, because they're not coming in and running the business and taking the owner's salary that's currently there now, they're going to pay that to a manager. They're not going to count that in their calculation.
Correct.
Got it. Okay. So 3 years of tax returns, up to date, year to date financials, could be P&Ls, could be, they're going to need the balance sheet also to see what the assets are, liabilities of the company, so on. Documented addbacks that you talked about earlier.
Yeah, we talked about that. And there could be addbacks for a lot of different reasons.
Sure.
It doesn't necessarily mean someone was being aggressive with their tax returns. Maybe there was something that happened that was weird. Maybe there was a fire. Maybe there was an insurance claim. Maybe there was a one-time customer loss or gain. I mean, there's all kinds of things. Maybe there was a disposition of assets. They sold a bunch of trucks. So who knows?
Yep. And that's why you really want the services of somebody on your side, the broker, who's helping you as the seller to be able to really figure out what is the true revenue, what are the true expenses of the business, and what's left over that can be counted towards the SDE or the EBITDA number. Okay, got it. And then also, sometimes what we do is as the broker and representation, besides just sending that financial information to the bank, we're sending the write-up. And you mentioned earlier, it might be the BLI, the business listing information sheet. It might be the confidential information memo. But that's a summary document of the opportunity, the history of the business, who the people are, what the products and services are. It tells the whole story of the opportunity, not just the number of people.
Yeah, the banks, they want to know what kind of business it is. They want to know how many years it's been in business. They want to know the history of the business, what kind of industry it is. It's not all about the numbers. I mean, it's about the story too.
Yeah, and where the growth opportunities are. Are there things that maybe the current seller is not doing that a buyer might be able to come in and do? And then on the flip side, when a buyer does come in, they're still going to need to be able to put together projections and present the budget and a marketing plan to the SBA lender. That's further down the road. But doing all this work up front on the seller part gives the seller a lot more confidence that you're going to market now with a business that's ready. Okay. When the buyer comes along, it's not the time to try and get ready.
Right.
You want to be ready long before that's the case. Okay.
And speaking of ready.
Yes.
We should talk about a deal that was done.
Okay. So we have a deal of the week.
We do.
This is a good place to introduce the deal of the week. Hey, Andy, do you know what time it is?
What time?
It's time for deal of the week.
Ring the bell.
Hey everybody, I'm Chip Redmond out of the Orlando office for Transworld here in Florida. We recently sold a cell phone repair store to a buyer who is actually a repair technician. This worked out great because of the fact that the seller was a bit absentee. They lived outside the state and they only came to the location a couple of times a year. This required her to be a little heavy on the employee or salary side of things. This buyer coming in is able to offset the costs of employees so that he can go ahead and take this thing in and make it a bit more profitable than it was before. One little hiccup we had on this deal was with the landlord. The lease had another 2 to 2.5 years left on it. The buyer was hoping to get an extension on that, either a option or a new lease. And the landlord kind of cramped down a little bit on this one and only would not do an extension, just did an assignment. So the buyer's going to have a little bit of hopes that when this thing expires, we'll be able to go ahead and put a new lease in place or another option. I am Chip, Transworld here in Central Florida. My cell phone number is 321-299-6867. My email is chip@tworld.com. Back to you guys at the deal board.
At Transworld Business Advisors, we help entrepreneurs buy and sell businesses every day with over 1,000 expert brokers around the world. Want to learn how it works? Head to tworld.com or give us a call at 800-205-7605.
Hey, welcome back. And we were talking about pre-qualifying businesses for SBA loans, and we're talking about things. It was sort of an easy process. Just get 3 things together. I did 3 years of tax returns, get some current balance sheets and P&Ls, get some addbacks and maybe a teaser sheet. But every once in a while, things get tricky. Right.
Every once in a while. I think every single deal.
Yeah.
That's usually, I think it's because you have sellers who you were saying earlier get aggressive on their tax return.
Yeah,
Okay. And most people out there running a business want to pay as little as possible. Okay. That doesn't mean that they're doing things that are not above board, but their accountant's job is to minimize the tax burden.
Yeah.
And so you're going to be paying for things through the business. You could have those one-time expenses that we were talking about earlier.
Accelerated depreciation by buying trucks or cars that'll really throw off the P&L for that year.
Right. So there's going to have to be some normalizing that takes place.
Yes.
And again, you want an experienced person helping you do that and preparing those financials the right way to present them to the bank and the financial institution in the best possible light.
Yeah. And interim financials, which we're going to talk about, I think, on a later episode, but interim financials can get tricky because if you're not calculating inventory and cost of goods sold and adjusting things and adjusting your books, because QuickBooks is an easy thing to use, but it's a hard thing to eventually get ready for an annual financial. So a lot of times accountants have to go in there and reclassify things and look at things that might not be expenses. They might be balance sheet items.
Got it. Right. Yes.
So.
And, we have a lot of sellers out there that are running businesses. They're not using QuickBooks. They're not using Zoho. They're not using anything except for a spreadsheet. That's probably not going to pass muster when it comes time to submit that to the bank.
No, I mean, you're going to have to put together a financial picture and a current financial, and you might have to hire someone to do that.
I was just going to say that.
Yeah.
So if you're running a business as a seller and you're not keeping accurate, or you're keeping the records yourself,
right.
You don't have a bookkeeper, you don't have an accountant, except for somebody that does your taxes. Would it be beneficial maybe to hire an outside firm to get those books and records organized? And
yeah, especially, and there are people that we have that do this,
yes.
and it might be hard to get your accountant to pay attention if it's in March or if it's in, September, when they're scrambling. If you're working with an accountant, now things have gotten way better with AI and computer systems. They're not toiling the way they used to toil up to tax
return time.
Yeah, but it's still busy for them.
Oh yeah, sure. That's not the time to say, hey, can you prepare or backlog my stuff? They might be able to generate it if they're doing it on a regular basis, but you may need to wait and then hire somebody on the outside who's got good experience there. And again, you were talking about the addbacks, et cetera, because transparency is the key on the side of the lender.
Yes.
They don't want to have to try and figure it out.
Nope.
You don't count for every little thing. Well, here's my Walmart receipts and I bought hairbrushes and blow dryers. They don't want to see any of that stuff. It's really significant expenses that will move the needle one way or the other. Okay.
Yep.
So let's say as a seller, you go through that whole process. Okay. You work with somebody, you get all your financials together. You got 3 years of your tax returns, balance sheet, interim P&Ls, 3 years of P&Ls previously. You submit that with the package with the SIM or the BLI and a good write-up on the business itself. And now this lender comes back with their letter and that basically says, based on what you've given us, yes, if you bring a qualified buyer, we would finance this deal. Okay. And then
there's a key word in there.
What's that?
Qualified.
Okay. Yeah. Does that buyer, it's not just any buyer.
No.
There's certain things on the buyer side. So what happens when a buyer shows up then? What are they going to have to do?
They're going to have to talk to a bank and they're going to have a decent credit score.
Good.
In the later 600s, I think, for the most part.
Yes.
They're going to have to be a citizen of the United States these days.
To use the SBA.
Yes, to use the SBA. They're going to have to not have any past bankruptcies or felonies, or so they're going to have kind of a clean kind of balance sheet in their lives.
Okay,
and they're going to have a down payment.
Yes, and typically that down payment, what's the minimum amount that we're seeing today now?
I mean, so I don't want to say. So first of all, you can't buy a business for zero down. However, I mean, I've seen some 100% financings in things like medical practices or employees buying businesses where they're where they're there already.
Yeah, there's a relationship.
But usually it's at least 5% if the seller is going to participate and be part of a 10% kind of down payment.
Okay, so let me restate that. So you're seeing that the bank's going to want 10%.
Yes.
With a minimum of 5% coming from the buyer, and the seller could bring the other 5%.
Yes.
By holding a seller promissory note,
Yes.
which they're going to get paid later on.
Yes.
Okay. But typically 10% is about what the SBA is going to want, however that combination works. And in some cases, it might be 20%.
Right. Yeah. And I left one important thing out. The buyer has to be qualified to run the business.
So they need some transferable skill.
Correct.
Something that the bank can look at and go, okay, well, you're going to run this team of people, but you've worked in a cubicle for the last 20 years and never been a direct manager. Probably not a fit.
Right.
Okay.
And if the business has some sort of special skills or licenses,
good. Yes.
they are going to have those licenses or arrange for the seller to stay behind, which is a whole nother story.
Yep.
And or have someone that's going to be a partner with them, perhaps be on the loan as well, that they're going to qualify the business.
So let's just chase that rabbit for just a second. So you bring a partner in, and that partner may have to be, depending on how much equity they're going to have in the deal, they may have to sign a personal guarantee too.
Yes.
And see, that's where it gets a little tricky from the seller side. You're like, well, I gave it to the bank, and the bank said, here's the letter. And then the buyer comes. We had a deal similar to this where the buyer comes and then gets through the SBA pre-qual process for the buyer because the business was already screened by the lender, and they're like, yep, bring us the right buyer. And it turns out later on that the buyer had an investor. That was not disclosed up front.
Yeah.
So then the investor was told by the bank, well, you're going to have to sign a personal guarantee. And the investor said, I'm not doing that. So that investor walks.
Right.
And now the buyer is standing there like, I don't have the money to finish this deal. The seller's upset, obviously.
Sure.
Okay. So yes, if there is someone who's going to be a partner with that buyer and they're going to have a big enough percentage of interest in the business, they're going to have to sign a personal guarantee too.
Yeah.
And they need to know that up front.
Yep.
So
but it's a great, we're so lucky to have this
SBA,
process.
forget about it.
Yeah. I mean, we have franchisees around the world, and we are the envy of many of them for having this ability for banks to lend to small businesses because of the SBA guarantee that these banks are getting from the government.
And I would put just one more caveat on there to that point. In countries that don't have SBA, okay, as a seller, you still need to go through this process because a buyer is going to need to see these. You might have a buyer who's not going through the SBA and is a cash buyer. Their accountant is still going to want to verify by your tax returns and your P&Ls and your interim financials that these are the real numbers before they can put an offer together or ask you to sell or finance or pay cash for the deal.
Well, to your point that this process has gotten so quote unquote popular and the interest rates have snuck up over the last few years that some sellers are looking at the program and going, that's such a great interest rate. And that's such a, I'll take it. I'll be the bank. And so we've seen a lot of sellers step forward and say, I'll take the paper.
Right.
So I think there's going to be more of this in the future. And, shout out to our international partners. Number one, you should be advocating for something like this. Number two, I think there will be a marketplace for debt someday where people can place this kind of debt. But we're not there yet. But
we're not.
But lots of great things. This was a great episode on how to get your business ready.
Yeah. And we're partnering now with a couple of different industry lenders, et cetera. And we've got a great relationship with Biz Buy Sell, which we've had for a long time. And LoanBud is working, and they now have a portal that our brokers and agents are using to be able to upload all of this information, get the pre-screening from LoanBud, and then that little seal can show up on your listing on the T-World site, on all the other portals, including Biz Buy Sell, and that will set the listing apart from a lot of the other things that are online. So, good episode.
Great episode.
And now we should end with
a listing of the week.
Listing of the week.
Yeah.
Yes.
So they could see what's for sale and go out there and buy it.
That's right.
Hey, JT, do you know what time it is?
Money time?
Almost. It's time for listing of the week.
Are you looking to own a business where precision, reliability, and true craftsmanship are the foundation? This is a thriving commercial glass contracting company with an excellent reputation. They specialize in high-end glazing, storefronts, and a complete glass system on major projects throughout the region. They have experienced, skilled crews, long-term client relationships, and well-established systems already in place. This business is built for performance. and it's built to generate continued strong profits. So whether you're an industry veteran or someone ready to step into a solid, well-structured construction business, this is your opportunity. A true turnkey platform with real upside potential. I'm JT Harp with Transworld Business Advisors of Greater Cincinnati and Northern Kentucky. Give us a call today at 513-725-7283, and let's talk about this exciting opportunity.
That was a great listing of the week, and so maybe they should go out there and buy it.
And hopefully it's pre-qualified and they can get that deal across the line.
Yeah, get that deal across the line because they have good financials and they packaged it and it's ready to go.
Good. Thanks for joining us here on the Deal Board. We'll see you at the next episode.
See you next time.
Thanks for tuning in to the show today. If you like the podcast, share it with your friends on social media. And don't forget to subscribe and leave us a review on your favorite podcasting app. If you have questions, would like to appear, or have suggestions for topics for the show, get in contact with us through our website, thedealboardpodcast.com.